Hello everybody and welcome to the Import Export Hub channel. Bogdan here, your host for the next couple of minutes. And guys, without further ado, in this video I will try to explain to you how to start exporting in 8 easy steps. And yes, I don't know if you know it, but exporting is quite challenging, but also very rewarding if you ask me, as from my personal point of view, by working in this field, you will be exposed to all kinds of challenges that will always put your brain to work, so to speak. I don't know, from interaction with multiple cultures and business practices to international shipping and international financial transactions, for example. And I think that what I'm trying to say here is that you will always have to adapt, to be flexible, to come up with new ideas, and of course to learn and develop new skills in order to be up to the task that lays ahead. And guys, if I were to make an analogy here, the only activity that resembles this one is the one that involves physical commodity trading, and I really think that both activities are really interesting. Of course, if you like to challenge yourself to get out of your comfort zone and take some risks from time to time. But anyways, I don't want to make a sales pitch for how great this activity is, so I will get back to the subject of this video, which is how to export in 8 easy steps. But guys, before I continue, I would like to answer a simple question which most probably pop up in your heads already, and that is, why is exporting good for a company? And my answer will be the following. In fact, I have 6 reasons for which I think that exporting is good for a company. And the first one is because you will increase your sales. If domestic sales are good, exporting is a way to expand your market, find new niche markets, and take advantage of the demand at both regional and international levels. The second reason is related to the economies of scale, because when you have a large market base, you can produce on a scale that lets you make the most of your assets or your resources. The third reason for which I think that exporting is good for a company is related to the reduced vulnerability. Because entering international markets can help you avoid depending on a single marketplace and suffer from a potential domestic downturn. The fourth reason, I think, is related to the new information and new knowledge that you will acquire if you're dealing in the international markets, because the global marketplace is full with new ideas, new approaches, and new marketing techniques. The fifth reason is related to the global and local competitiveness of your company, because the experience you gain internationally will help keep your company competitive both in global and local markets. And the sixth and last reason for which I think that exporting is good for a company is related to the higher profits, because you will take advantage of the premiums that some buyers are willing to pay if you export. Of course, exporting, as I said earlier, comes with many challenges, but with careful planning and preparation, you can easily surpass them. And because I was speaking earlier about challenges, I think that the most important ones are related to the fact that you will have increased cost, as you might have to modify your packaging or marketing materials, for example. The second challenge is related to the level of commitment, as it takes time, effort, and the resources to establish and most importantly maintain yourself in the foreign markets. The idea is that when you start exporting, you have to be in a mindset that is telling you that you should be here for the long haul. The third challenge is related to the language and the cultural differences, of course, because you work in an international environment. Then you have paperwork and, of course, competition from other countries. So guys, basically these are the benefits and the challenges when choosing to export, of course, according to my own personal experience, and I won't go further and debate which is harder, to import or to export. because both activities are hard and challenging, and all depends on the type of the activity, type of product, type of market, trade agreement in place, type of supply chain, relation with the buyer or the seller, and of course the list goes on. But anyways, I want to get back on the topic here, and I will begin with the first of 8 steps that hopefully will make the export activity seem a little bit more digestible if you want. And the first step is to plan, as bad planning or no planning can lead to major failure that could damage your domestic operations as well. And remember, you don't have to do everything by yourself. Outside experts can help find you overseas customers, manage the sales for you, or I don't know, handle the paperwork and deliver the goods. The foundation here is to build your export plan, in which you will add the relevant information like, I don't know, business history, facilities, production capacity, lead time, international market goals, comparative advantages in production, if there are any, market overview, market entry strategy, regulatory and logistical issues, risk factors, and of course a financial plan in which you will list the operating budget, revenues, and sources of funding, and of course let's not forget the cost of sales. The second step is to identify your target market or markets by screening potential markets and collecting relevant statistics and data to your sector. After this, you will need to assess target markets by, I don't know, studying the competition, both domestic and non-domestic, become familiar with the distribution channels, and identify tariff or non-tariff barriers. The third step in this export experience, if you want, is to reach out to the customer with the right international marketing approaches. And here, don't forget about the P's, so many P's of international marketing. And you have product, price, promotion, place, payment, personnel, planning, paperwork, practices, partnerships, policies, positioning, protection, and I think there are others, but I will limit myself to these P's. And here I will focus a little bit on the pricing checklist, as you will have to factor in the following. So, marketing and promotion, production, documentation, transportation, customs, and financing. So please don't forget to consider these categories in order to track your costs and develop your pricing strategy. The fourth step is to open the door and enter your target market, either through direct exports or through indirect exports. And for the direct exports, I think it's quite obvious here, you market and sell directly to the client. Advantages here, you will have a higher return, of course, on your investment than selling through an intermediate like an agent or a distributor. It allows you to set lower prices and become more competitive because of that. And of course, you are in close contact with your customers. On the other hand, there are some disadvantages, like you don't have the infrastructure and services provided by a foreign intermediary. And here, customers may take longer to get to know you. But remember, all depends on the strategy you're pursuing. Of course, when entering the target market, you can always enter through, I don't know, partnerships like licensing, franchising, cross-licensing, cross-manufacturing, or through a simply joint venture. If, on the other hand, you choose to enter through an intermediate, my advice is to select the right one, and here you should consider the following variables. And you have to consider the size of the sales force, the territorial coverage, the product mix, facilities and assets, marketing policies, and frankly, I will add here also the customer profile if you have access to it. Having done this, the fifth and next logical step is to deliver the goods, and you should consider the following things here. Do you need an export permit? Does your partner need an import permit? Do you need to find a freight forwarder and a customs broker? What do you need in terms of packaging, marking, and labeling? Then you have the export documentation from, I don't know, commercial invoice, packing list, certificate of origin, to certificate of insurance, and of course a bill of lading if maritime transport is involved. I know it sounds a lot, but once you do this a couple of times, you'll be a master at it. So don't be scared to get out of your comfort zone and go out there and taste the challenge of exporting to other countries. The sixth step is to identify your export financing requirements, as most of the countries have export banks focusing on companies that of course want to export. What else? So you could either leverage that, or you could finance your activity on the run if you want by asking, I don't know, cash in advance. But frankly, for new business partners and with all these scams taking place right now, this is not a viable option if you ask me. Other methods of payment are related to letters of credit or cash against documents, which are two of the most used methods of payment in international transactions, and I definitely recommend one of those two solutions. The seventh step, as we are approaching the end, I want here to underline the important aspect of the legal side and how important it is to understand the international contracts, as you will need to be familiar with terms like risk, rejection, price, rights of action, or which law is the proper law when dealing with customers from another country. And all these terms should be clearly stated in the contract of sale. And also another important thing to consider is the fact that you should use the right Incoterms in the contract as well. I don't know, other important factors that you should be aware are related to intellectual property rights and international standards, as your products or your services have to be in compliance with the local requirements. And of course, let's not forget the importance of the intellectual property. So you should not infringe any intellectual property locally or internationally. Now, moving on to the eighth and the last step in our export journey, so to speak, I can't help myself cover the importance of e-commerce from the last few years, and my guess is that this channel will grow, at least in the weird countries, that is Western, educated, industrialized, rich and democratic. Personally, I would add here also India and China, as these two countries are the next growth poles in terms of e-commerce, and having a footprint in the e-commerce channels in these two countries is very, very important. And if you don't believe me, take a look at the biggest brands from Europe and the United States who are investing a lot for being part in these two huge markets. Unfortunately, from my point of view, these two markets are not at the fingertips of the small and medium exporters, as the budgets and resources involved in terms of marketing, supply chain and logistics are very, very high. But again, depending on your commercial strategy and distribution channels, you can either go through big online marketplaces like, I don't know, Amazon, or regional ones like Taobao, or I don't know, if you choose to keep as much as you can control of your supply chain and sales, you can opt for third-party fulfillment operations and do the marketing and sales by yourselves. At the moment, this is still an infant industry, if you ask me. Lots of new entrants, consolidations, and volatility. So my advice is to wait a couple of years before you enter full speed ahead in this type of distribution channel. So there you are, guys. These were the 8 steps that hopefully will give you some guidelines in terms of how to start exporting. And by all means, this is not a complete list, and you should adapt these processes to your specific activity, of course. Also, here I would like to cover some things that you will need to consider when exporting. And the first one is related to trade blocks. And if your country is part of a trade bloc like, I don't know, the European Union or NAFTA, so United States, Canada, and Mexico, I highly recommend you to start exporting towards other members of that trade bloc. The second thing to consider is trade barriers, both tariff and non-tariff barriers, as these can help your product become more competitive, especially if you're based in a developing country who has a trade agreement with a developed country. The third thing to consider, especially now, and from my point of view, I think that this trend will continue, is to pay close attention to what the big companies are doing in terms of nearshoring and reshoring. If you're working with parts, accessories, or components, who most probably are part of a global value chain, and here my recommendation is to try to be as close to their manufacturing cluster as possible. And guys, before I finish this video, I want to make a couple of predictions, if you want, concerning the future of international trading. And my first one is related to the fact that both imports and exports will become more and more disintermediated, meaning that the actors in the process of import and exports will be fewer, each of them adding more and more value in the process, as the information asymmetry in terms of supply, demand, marketing activity, prices, and so on is fading. The second prediction is somehow deriving from the previous one, and I think that cash crops like soybeans, wheat, and so on, with the help of containerization, of course, will be more and more the subject of trade for small and medium players, somehow bypassing the big traditional trading houses. By all means, of course, these trading houses won't disappear, but I'm talking here in terms of scale and scope. I think that big players like the trading houses will play in the league of big industrial importers, focusing on adding value either by vertically or horizontally integrating new processes, while small cash crop exporters will play, of course, in the league of small importers and addressing their needs. My third and last prediction is related to the opportunities that India, Southeast Asia, and Africa offer and will offer on the medium term, both in terms of exports and imports. And here, of course, as each endeavor, it bears some risk, but I think that with the right strategy in place, there is business to be made by trading with these three growth poles. So that's it for today, guys. Thank you all for watching. I really hope that I've managed to provide you some useful information. Don't forget to hit the like and the subscribe buttons. And of course, until next time, keep your business safe. Thanks.